Good morning, traders. This is Christopher Terry with the opening play video for Tuesday, December 9th. Okay, yesterday in our opening play video, we looked at the market that went from low to high and then down for an 886 retracement. We also are looking at this swing low to swing high down for a 141 extension. So we have a lot happening right at this particular area. The 886 is typically a nice sweet spot in a trading range where the markets will find a key support or a resistance level. In this case, the market is trying to find support at this point. What we have here is a daily chart of the EUR USD, and we're looking at potentially a third drive to the downside. The market gave three little pushes. We're looking at that right at the moment. Here's down, here's 1, 2, 3. We could also see the highlights of the oscillator getting those three higher lows. Okay, let's just pull this down a little bit here like that. And like this. And like this. Also looking at a trend line. We'll try that again. We're looking at a trend line from here straight down. As you can see, the market definitely put in its third test of this particular trend line, and we're also getting another trend line here. So we're forming some type of a wedge here. The trick is, can the market hold above its open today at the time of this video and stay above it and continue racing a little bit higher? That's going to be the trick going forward. And we have the chart forming a higher low down here. So we're looking at all this prior data that the market is trying to hold, like right here, for example. So the market broke to the downside, came back through this zone, now has pulled back and is acting as a support. The trick is to get back above the 1.2343 level and then get back into this range up here. And then we would feel comfortable that the market has put in an intermediate term low. For now, we're still watching. We have a long trade initiated on the signal surface, and we bought that on the pull back down. So those of you on the signal surface, that's essentially what we're doing. So let's take a look at some other chart. Okay, we're looking at the AUD-CAD, which has a perfect bat pattern that's forming, as you see here. All right, XABCD pushed right into this zone. Let me just pull this down a little bit. All right, and we see it's trying to hold this whole area as a support at this point. So watching this to see if it can get back above the 886 area, which is 95.17, and start to make its way back up. So you got a beautiful, beautiful bat pattern. We had multiple waves on the way down, and now we're getting these little 1, 2, 3 waves also. If you can't see them, let me just draw this out for you and you can take a look. Okay, here's the first wave, second wave, third wave on the downside. So at least you see that we have a beautiful A to B CDD relationship on that way down. So I like looking at this from the long side. You can put your risk right below 93.87, right below this area down here, and keep a good wide risk if you're looking to trade this particular market. So, and let me just fix the chart and get rid of these arrows and stuff so I can post this. Okay, we can get rid of the triangle. We're going to get rid of the text markers. Yay, there we go. All right, let's take a look at the S&P E-mini futures. Okay, as we've been speaking about in our prior videos, we got the S&P E-mini futures up here, and we formed a big XABCD pattern, and we're seeing that the market had held resistance over the weekend and has turned sharply to the downside. So we're going to drop down to a lower level. I am looking at this B area as 2012 as a key area of support to watch. Now, prior to that, we're going to watch we're going to watch another level and see what happens there. So let me just pull over my chart. Okay, and we are good to go. So looking for potential X, A, B, C, D to the downside. All right, the market has shifted off that daily resistance and is now getting a correction. I would assume that the market still wants to come lower. So any rallies at this point, still going to find resistance. I'm going to watch for a play below the 48 level. If we can get below that, then we're going to start watching the 36 to 31 area, and that's going to be a key area of support that we need to pay attention to. The market is still in an overall uptrend. Once we see if this can hold or not, then we'll determine if they want to run up again, put a lower high, or if they want to shake them to the downside to this 12 area that we mentioned, which is the B point on the much larger XABCD pattern. So for now, any rallies back up, we're going to look for resistance to come in. And how that is going to look will be something like this. Let me see if I can draw this in for you. So you got high, low, retracement. High, low, any push down, then any move back up above there. So we're looking for potential corrective wave up. Any move back up, we're looking for another whole wave to the downside to complete this larger pattern. So the market gave a shift to the downside, little reaction, getting a test back below that low. So any further push down tomorrow, potential for support to come in. It's going to look something like this. Right? I would assume that the market would want to try to hit this range low down at the 48.5. If it does, then we're setting up for that next swing to come right back up one more time before the market puts in its first lower high. We still have to see the market put a lower high. Essentially, it's going to look like this. All right, it's essentially going to go here, 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 something like that. So that's essentially what we're looking for. If this truly is a big resistance above, if this truly is going to hold, we need to see a lower high first, a failure, and a move down, and that will bring us to these much lower levels on that higher time frame. Anyway, that's about it. My name is Christopher Terry. Rock and roll. Let's have ourselves a great trading day. And I see my traders in the chat room in the morning.